One, Taking It from the Top by Urban Forex. Alright guys, welcome back. So what we're going to be doing this week is I'm going to change things around a little bit. Instead of giving you little bite-sized videos, for this particular week I'm going to give you one video. Because before we proceed into more in-depth knowledge, up until this point I want to give you a rundown, basically taking it from the top all the way to the bottom of what the ITP actually stands for. So you're basically getting a re-summary leading up to this point so you can actually see the whole thing in a single place, okay, as into like a single trade, for example. So you get an idea of all the lessons you've learned so far to put into practice. And then going into the further weeks, what we're going to be doing is we're going to start tackling in every little detail that belongs to it. So let's get started here. Now, I want you to focus on this particular pair and this on this day. Okay, I'm going to mark it for you as we go along. So on this day, the markets are, for me, London opens right here. Okay, I'm just going to label it right there. London opens up right there, and London starts to suddenly start taking it for a higher high. Now that's great. It goes all the way up. New York opens in this area here. That's where New York opens, New York Stock Exchange. And then it tries to make a higher high and then it fizzles out. Okay, and then New York closes there. All right, so that was the whole trajectory of the buyers were in control and then they fizzled out. Now, let's assume you come in the next day. Okay, you might be aware, you might not be aware. We'll leave it open at that, as if you probably don't even know what's going on. You come in the next day and you're like, okay, I'm going to trade London today, which is starting here. And you're looking at it and like, okay, what did Asia do? Well, what a boring Asia leading up to London is just going sideways. It's not really doing anything. And then as London opens up, it's like, not really active, right? Nothing really. And then it breaks the low here, right? As it breaks the low there, the mind goes into, oh, I guess it's getting ready for cheese mode because the power is on for the sell side, so the cheese mode must be on. Now, these are the days where you have to be very, very careful. Now, let's go and try to understand a couple of things. One, there was some extreme power moving all the way up into from London going up to New York yesterday, okay, which made this really a higher high. Then it started to pull back, and since the pullback, we've never made a higher high since. Neither have we gone below the guy who started it, basically the main meal, if you want to call it, right? So just like that, what you've learned is if this is the main meal and you get, some digestion, if you're unable to make a higher high, any further digestion should be able to go further or drop down, because that will be a money spot, right? So having that said, keeping that in mind, we had the initial move. He tried to come down and go up during London, was unable to make a higher high, then it dropped further down. Okay, as it dropped further down, it starts to go a little bit sideways. Okay, a little bit sideways. Now remember, few things happen. One of the main things I want to always put your focus on is not this design, but rather that fear of, I hope I didn't just activate a power. Okay, what that means is, although this is the ideal design we like to trade, which is up, initial pullback, unable to make a higher high, deeper pullback, and get ready to buy, right? Although we like this one, we need to understand that while he was doing a deeper pullback, we've actually taken out Asia. The sell power is on. Okay, when we're dealing with a lot of this anticipation trades, you will generally see this 9 out of 10 times where the sell power or buy power will activate, but as it activates, it will come back. It will come back as if nothing happened. Okay? This sometimes will catch you off guard. Okay, it'll catch you off guard if you're purely doing technical analysis. So now what I mean by catch you off guard is you might be looking at that and saying, okay, I'm going to go down to the 3 minutes and look for some cheese in here so I can do some sells, and you do the sell and the sell gets to the recent low, but it's unable to just keep crashing down as it normally would. But the clues are hidden in your correlation and in your fundamentals and everything behind that. So you want to always be aware that you don't want to be getting stuck in just doing technical analysis by saying, where's my design? Where's my pattern? Okay, by doing that, you are losing your edge as a trader. Okay, you're losing your edge as a trader. You want to stay as informed as much as possible to make the best decision you can. Okay, so in this case, we've had good news for pound running for us, okay? And we've had some temporary weakness in pound come in, but it wasn't major. As that thing turns around, you're like, aha, does this mean something when it turns back around? What happened to my sell power? It tells you one thing for sure, is the market is now activated. Okay, it is on. By coming down here and going back up during a New York opens right around here, that's where New York opens, it's like, whoa, look at the activity on the volume. They're very, very high. They're alive. So if they're alive and they've broken the low, why aren't they, doing that? They're not coming down either. They've turned around and went back up, which means all of this down move was artificial. If it's artificial, now you can begin to prepare that larger move we've been talking about. Okay? So, one of the things that once you come down into here and it starts going sideways, generally we enter, in cheese trades in that money spot. But in this particular case, you cannot enter in this money spot because we don't know if it will become a fake or not. Okay, so taking the trade here is an initial risk. Okay, so sometimes you don't have this risk because it hasn't broken anything. But if it has broken something, and it's, in this case, like it's come down and then it's going sideways, it looks like, oh, it's the best time to buy. Yes, that is correct, but you're not out of the fire yet. You're in the danger zone. So you have to allow it to come back and then get you a better price that it can hold. Okay? So in this particular case, as a 60-15 trade, only when it starts to go sideways here can you activate your buys accordingly and saying, okay, I can take the buys from here and then try to take it up as high as I can, permitting time of day and all of that stuff to support me. Now, this thing drags into Asia the next day, and then eventually starts to kick off and tries to go higher and higher. But initially, that whole moment is it's having trouble because right at this time, if I look at my time here, it is approaching midday US. Okay, midday US. So all the day it was doing nothing. If you start your day and you see stuff like this, where it's going sideways, and then you see a suddenly opening outside the sideways and then a probe that comes right back in, chances are you're working with an anticipation day. Look around, find out what's going on. Okay? But having that said, is before that happens, you're aware of first swing, unable to make a higher high. We're trying to get lower for set 2, and as set 2 comes in lower and starts to go sideways, just be careful to not buy here. That is one of the main things I want to highlight, is you want to avoid taking the buy from there because he can go up to here and then crash all the way down. Okay? That is a very high possibility. So you want to avoid that and see only when he gets back in if you can grab it from a little bit higher. Okay? This will help improve your accuracy a lot higher when it comes to trading these type of trades. Because when you're dealing with a lot of these anticipation trades, you're also dealing with a lot of patience. Okay? Unlike your cheese trades, you're more ready to go. It's like rock and roll, like let's go, let's go, let's go. These are a little bit more slower and it takes time to develop, and you need the right market hours and stuff like that. So let's have a look at this area. Let's have a look at this area as he made a lower low into on the 3 minutes. So we can look at that cheese area on the 3 minutes. So let me go get that spot. All right, so here we are on the 3 minute chart. And as you can see, in this particular case, we are in this big meal down, comes up for some partial digestion, okay, then goes down, unable to make a lower low, and then digests further and starts to go sideways. Now, this generally we like it to tell us that it's going to probably turn around, because look at how high he's pulling back. Okay, look at how high he's pulling back. Now, this was the money spot, right? Let me go back to this area. This is the money spot, right? Which the sell is supposed to take off from, generally speaking. But it didn't. It turned around, and that turnaround means something. And it's not just turning around, but it's also fully digesting this big meal. Okay? One thing you want to understand is when you have a big meal like this, when the markets do this, come down, and then it goes up, comes down, it's generally supposed to take off from there, right? From this sort of a money spot up here. But there is certain scenarios, what I'm going to be teaching you next week, is what happens when the market doesn't do that. What is the process after that? How do you identify that process, and how do you make the most of it? So we're going to be talking a lot about something called a trend pullback failure. Okay, that is a whole different edge that I think will come very, very handy to you as you first master this stuff. Okay, so right now you have a complete overview of everything leading up to a trade that reverses back inside. It's as if the whole bottom didn't exist. Okay, and if you have your fundamental backing and everything, a fake power move like this is basically a golden ticket. Okay, initially it came down, you're like, oh great, looks like it's going to be a cheese day. But when it turns back around, it means look for what's going on. And when you actually look at the bigger picture and you're like, actually, I can see this is part of, I'm on the 3 minutes, it doesn't look the greatest here, but this is part of a 60-15 trade. We had an initial attempt, unable to make a higher high, lower attempt, coming back. This is going to be a nice big buy that I can take it all the way up to here, if not further. Okay, all the way up to the same recent highs. Same highs where we've been coming off of. Yeah, and that money spot will help you to take it all the way down. Now, this money spot can activate and be stronger here. Okay, now notice a few things happened, right? When Asia opened on this day, he came down and went back up. Okay, great. But you know now that this is going to get ready for a buy. You can do one of two things. You can buy it now as an aggressive trader. But if you've noticed the time of day is running out, you can do one of two things. You can wait for the next day Asia to load up. And as Asia loads up and London opens up the next day. So London is here. That's London right there. So you'll know on the next particular day, since the target is all the way up here somewhere, that's your low of Asia. That's your high of Asia that day. As this thing starts getting higher and higher, if you are able to spot this and fundamentals and everything back you up for this, doing cheese trades, once you break the highs of Asia, that can be a conservative way to enter, giving you also an added edge and confirmation that you're good to go and you're lining up with the higher time frame. This is something, again, I will try to share with you guys more in detail next week, but this is something, as a reference, we call as the eclipse. Okay? What's an eclipse? It's like when the moon comes in front of the sun, right? Okay, that's what an eclipse is, right? So if that's the sun, the moon comes in front of it, and then they line up. What an eclipse here is, it is your higher time frame, which is your 60-15, lining up with your 3-minute cheese that you would normally do. This just tells you, normally when you get ready to exit, there's a chance that that range that you see when you're in the trade, instead of exiting fully, you can use that as an area to get out 10%, 20%, and continue riding it. This adds to your power to your trade, because you know you're able to sustain it a little bit longer. Okay, so enough clues for what's going to come next week. It's going to be a great week. I just wanted to give you guys a full heads up and a recap for your anticipation trades leading up until now, what you've learned so far. The set 1, set 2 process, time of day process, and the fear of be careful when you're dealing with the set 2 area, that you do not get tricked into a cheese trade for the sell when actuality is going to try to turn back around. And if it turns back around, it's like, instead of fearing for what happened to my cheese, it's more of like, oh, great, something larger is setting up. Let's keep a lookout for it. All right, guys. So I'll see you guys next week. That's it for this week. I want you to practice, look over all the lessons as much as you can, really recap everything, and then next week we go in a little bit more hardcore. Cheers, guys. Bye for now.